Welcome back. This is India Market Open. We are now taking a look at how things have fared as far as the futures and options segment is concerned. Last Friday, it was a day where we actually began on a weaker note, but eventually we saw the Nifty recover and close marginally in the green, but that wasn't the case when it comes to the Bank Nifty. But as far as the Nifty is concerned, we are looking at unwinding. It was a flattish day of trade, but we did manage to close above the mark of 24,300, even as we saw the futures decline, or rather see a decline in its open interest by around 2.5%. The Bank Nifty, on the other hand, taking a step back nearly by as much as 0.9%, and we have now lost out on the 53,000 mark, and again unwinding of nearly 7% there as well. But as we move into a new week, what are the positions telling us when it comes to the options market? So on the lower end, of course, we continue to see strengthening of the 24,000 put level. That's where we've seen increase in open interest. But along with that, we're also starting to see a little bit more writing around higher levels, around 24,100 and 24,200. On the higher end, what we're also seeing is on a relative basis, there is not as much open interest in the 24,500 call. This also indicates just ever so slightly that perhaps traders at the moment are a little bit more bullish as compared to bearish. Now, let's move on and talk about stocks. We did see longs in UBL, Divi's Laboratories. HDFC Bank, on the other hand, took a big knock on account of its quarterly updates coming through. And besides that, we're also keeping an eye on stocks which are unwinding. TVS Motor Company, Gujarat Gas, Ambuja Cement, along with emphasis on Hindustan Copper, all of them advancing, even as we see a decline in open interest. So short covers there as well. But on that note, let's bring in an expert to see what he makes of these markets. Well, we have Milan Vaishnav of Gemstone Equity who's joining us on the show. Milan, good morning. Thank you so much for joining in. Let's start, as usual, with your view on the Nifty.
Hi, Adam. Good morning to all of you. I see multiple things going on with the Nifty right now. We have seen the previous week that was trending much in line with the expectations. But I am more worried about the way we have deviated from the mean. If I take a look on the weekly charts for next couple of weeks, I see that we are trading above almost 1,600 points from the nearest 20-week moving average, which is the fastest and the nearest one. And if we talk about 50-week moving average, we are almost 2,800 plus point away from it. So what I'm little uncomfortable with the thing is that even if we slightly revert to the mean, then we are in for some good, although not that big, but sizable consolidation or retracement from the current levels. That is one thing I'm looking at. But if I speak from the very short-term perspective for, say, next couple of days or maximum a week, I've seen two things happening. One is that 24,000 continues to have the maximum put Y, and that is not getting, that is not going away. So it makes a good case for 24,000 acting as a major near-term support, important near-term support, I will call it. But on the other side, on the higher side, 24,500 continues to have a maximum accumulation of the call Y, which is followed by 24,800. So what I feel that for that from the immediate short-term perspective, traders are neutral to mildly bullish. And 24,000 may continue to hold its support at least for next couple of days. That's what I believe going ahead from here. But yes, by and large, there are signs of some minor fatigue at higher levels and some consolidation from the from the current levels, and a bit higher levels cannot be ruled out going ahead from here.
Right. So Milan, based on that, you're still playing a short strangle at the moment on the Nifty?
Yes, I by and large expect that even if we continue to post incremental gains, we are not going past 24,800 levels. So I would create a short strangle for 18th July expiry. I would sell 24,000 call and 24,000 put and would collect a premium of around 98 rupees. And that would translate into some expected yield of 3.5 to 3.7% if Nifty continues to stay in this range. And as a part of risk management, we would have to exit this position if 24,000 ends up getting violated on the downside, or Nifty moves past 24,800.
Okay, so that's the short triangle on the Nifty.
Right.
Now, Milan, just a follow-up question. Do you think that given the premiums, it would make sense to add wings to this particular strategy, or you'd want to avoid and just stay with, the breach on either levels?
See, the reason that I've gone to the next week is the thing that we are sitting once again on very low wicks, and because of that, there are virtually no premiums if we sell the same pair for this week expiring. So even for the next week, we are hardly getting 98 points. So if we add wings to it and make a condor out of this, we would be extremely compromising on the potential yield. So rather than, I would stick to a very disciplined exit rule and would stay with the strangle and make a very disciplined exit if either of the if either of the levels get violated.
Okay, fair enough, Milan. But from there on, we move on. Of course, we are looking at the earnings to start through. I'm not exactly entirely certain if you have a call on TCS based on the earnings, but what is your view here?
No, I am a hardcore classical technical guy. So obviously the call is not based on the fundamentals, but this is purely a technical formation that I'm looking at. And importantly, Nifty IT index as a whole is showing a very strong improvement in its relative momentum against the broader market. So based on that, I have a directional view on TCS. I would issue a call spread here with by buying 4,000 call and selling 4,300 call. The max premium that we would pay would be around 13,668. That is the maximum loss that one can ever incur on this trade, whereas the maximum profit potential is 38,800 plus. Now, we can even minimize this loss figure. Maximum loss figure can still be capped at lower levels if we keep a protective stop on TCS spot levels slipping below 3850.
Okay, there you have it. That's a bull call spread on TCS. And this is, of course, played over the course of the entire month. Well, on that note, Milan, taking a moment to thank you for joining us and taking us through your views on the markets and, of course, giving us a couple of option structures to play around with. And with that, it's back to you all.